everybody, welcome to the Christmas edition of Take Stock Live. Sam Evans with you on, well, December 24th, if you didn't realise. Happy Christmas to you, happy holidays, however you celebrate it. What a great time of the year, and I think plenty of us need it right now as well. It has just gone noon, and it is here, noon Eastern, should I say. I'm Sam Evans, I'm your host of Take Stock Live, brought to you by Stockability.com. We're going to be having a slightly shorter show today as well, as the markets are going to be closing in just about an hour here on the East Coast as well. Wherever you are right now, I hope you're doing well and happy. This is a live session right now, and I can see many people obviously just kind of looking in right now, joining us live as we go. Great to have you in here as well. This show is going to be recorded, and it's going to be available for view after the show as well by looking at it here on the Facebook Live page, or you can go to the Stockability YouTube page, where you can also get another viewing of it right there as well. But it's kind of an open day today, and when I announced a couple of days ago that we were going to be doing a little bit of Q&A on the session, on this short show today, in the spirit of the holidays, I had a few questions come in, so I'm going to be answering them as well. I'm going to be looking at some charts. I'm going to be on my own today, no guests, but I will have a guest for you next week on the show then as well. But, it's a funny day today. First thing, I think the question a lot of people have always asked me is, do you do much trading and investing over this period of time? And typically, no. To me, I don't know about you, but Christmas, the New Year, it's a real sacred kind of time. So especially, with a very excited 3-year-old right now upstairs, I'm going to be spending time with the family. The markets can wait. And I always find that, sometimes over this Christmas period, you can get a wonderful thing that can happen in really good markets. You hear a lot of talk about the Santa Claus rally, and I've got a question about that shortly as well. But generally, I take the time off, and I can say after this show's done, I'll be done. And, I'll probably check into the market on Monday, but again, not looking to do anything active. Trust me on this, January 4th is the day to mark on there. That's going to be the official first trading day of the new year. And that's a day which you don't probably want to miss. That's the day where we really want to be kind of getting into this and taking a look at the markets as well. But we could get some activity next week as well. I always hear the Santa Claus rally being mentioned on here. What is it? Well, we'll talk a little bit about it. I've got some questions on the show as well. Rajesh, how you doing? Sean Kroger, Louise, a few of you guys watching live right now as well. Feel free to type in comments and questions as we go on here. Again, I'm more than happy to answer the questions as we do it. But just before we go in, let's see where the markets are right now. Let's see where things are at the moment. S&P 500 up right now. What are we up here? Actually down. It's about break even for the day, actually. About 70 cents, a 0.02% change. Yes, look, I'm using new charts today. We're on a new system on here today. So I'm going to go full screen on this so you can see everything on here as well. S&P, you'll see on here, slightly indecisive day on here as the market's pushed a little bit higher this week and come back down. Looking at this on a weekly perspective, this week again tried to make new highs, brand new highs that we had in the market of $376.46 posted this week. That is the current high on the S&P. Right now trading around $367 actually as we speak on the mark right now as well. If we look at this on a day, and again, I think just getting an idea of it from a daily perspective on the charts right now, we can see kind of what kind of it's been like the last few days here on the charts. Let's go just zoom in a little bit so you guys can see on here nice and clearly as well. It's been a quiet couple of days to say the least. We had that big spike in the market back on Monday, and now obviously, again, this is what I'm talking about, this kind of trading activity that we're seeing right now. Very, very challenging. And again, for any investors looking at the market right now, this is why I tend to stay away from the market during these periods of time. Why? Because if the S&P is not really moving, you're probably not going to see a lot in the whole broad market as well. Talking of that, let's go over to the QQQs right now. Take a look at that. One of the biggest, busiest ETFs out of everything that we trade on here as well. A little bit more action right now. $308. $300 seems to be the new norm on here. Since we established this controlling area right here between 297.50 and 302.05, this is kind of the new benchmark. This to me is a real key area, and if anything, I'd like to just give up some of the key areas I'm looking for. To me, the QQQs has still been the strongest of the two. The uptrend is still in place on here. Last couple of days a little bit indecisive. Some sellers definitely residing around $310 right now as we speak on here. But for me, the psychological number is 300. Again, if you are looking at any buying opportunities in this particular region, always be aware that markets can go a little bit lower before they go higher. So for me, I'd see an exploratory range between around 302 and 295 on this particular market when looking at the QQQs on here. But again, no real cause for concern. I would say this though, if the $300 mark gets broken, then we might see a little bit more selling action coming into the market, but only if that actually happens on there, guys, as well. So I want to do a little bit more of a brief market outlook about this as well. But for right now, again, I wouldn't be surprised to see a little bit more of the same action on the markets over these next few days, actually, just again, side-to-side action on this. Let's go take a good at the Dow Jones. Again, I'm looking at the ETFs here. If you're not familiar with ETFs, Exchange Traded Fund. These are great trading products. Rather than look at the actual cash index, I always find it useful to go and actually look at the ETFs. You'll see on here a little bit about that right now. So if we just take a look over here and I do a little bit of a zoom for you on the charts, you see on here, they call this the diamonds. This is the Dow Industrials. The DIA is what we're looking at, the exchange traded fund on there for you guys right now, okay? That's the one that we're looking at right now on the Dow Industrials right now, right on there. What's the Dow telling us? I mean, again, pretty much the same thing as anything. For me, this has been the laggard of the indexes. I would say on here. Merry Christmas to you, Stockability. This has been the laggard of the market. I mean, really, taking a look at where we are right now, you know, yeah, we still got the uptrend in place. We do still have the uptrend in place, but just look at this sideways price action that we're currently seeing on the market right now. I mean, really, you know, when looking at this, you know, there's really not a lot to say about this other than that, you know, it's a sideways market. A slight bit to the upside on here again. What are the key levels that we should be really looking at right now? Let's go take a look. I would say based on here, the real price action for me is going to be around the 290 mark. This is the area for me in question that I'd expect here, but there's a lot of unfilled gaps below it. This market's not going to be in trouble unless it breaks the 285, 280 mark on here. But again, if I'm a bit more bullish on the market, I've got to go with the tech so far. S&P, the Dow, the industrials, the big ones, the big corporate ones there, just not giving me the same bang for my buck on this. Talking about bang for your buck, though, let's go take a look at one of the biggest performers that we've seen, the Russell 2000, the IWM here, the iShares, BlackRock IWM. Now, this thing, I've been looking at the markets and the futures a lot, and if you're not familiar with the futures market, that's perfectly fine. You know, not everyone else, you don't have to be familiar with the futures market. Really, let's start with you looking at this. This market here in the futures posted this week over 2,000 points on the futures market. Looking at it as we speak right now, look at this, right? Teetering today, highs. Look at those highs, guys, of $199.94, $200, a big psychological number for the Russell here. Something very, very important for us to think about as well. Man, what an upward trend in this market on here. And I tell you, it's incredible to me how the 200, you know, small cap stocks, medium cap stocks are the ones that have really performed coming off the back of the COVID pandemic that we started, can you believe, all the way back in March of this year. Incredible. Again, still cause for concern. What I've not seen in this market, which I want to see, is some kind of a pullback before we move higher. And it's hard to see a real benchmark in here. For me, if we don't get over 200, though, that could be a little bit of a sign of things to come of general weakness in here. Again, I'm still interested in buying pullbacks on this particular market. As we speak right now, I'd be looking around this area here. In fact, let me just do this a little bit cleaner for you in here. I can probably do it this way. Look, this is really the area that we're looking at, around 195, 190. 195, 190. This is the kind of zone that I'd be looking at a little bit more on here to see. We call this a support zone, and the support zone is I'd say the near-term kind of number. Again, there's going to be a lot of price activity in this whole range here as well. But I'd be willing to take a stab. But any entries into the market coming into the new year, guys, I've got to say, be smart with the profit taking. Be smart with the profit taking. I think there's going to be a lot of hope, you know, as we have a new president coming in as well. Man, Pardon City. Talk about Pardon City right now going on with the current administration. But at the end of the day, you know, I think a lot of hope going into the new year. Vaccines, Moderna, all that kind of good stuff as well, I think is a big factor in this. But again, you know, in economic cycles, it can sometimes take a lot longer to see the long-term impact, you know. And while there are companies that, a lot of small businesses that have struggled in this period of time, you know, let me look at the Russell on here right now. You know, there's also a lot of medium to small size businesses that are doing very, very well. And this is encouraging in this respect too. But again, remember, markets will go up if people keep buying them. One of the big things that we've been talking about lately is how much of this is actually to do, all of this action that we've been seeing in the market, how much is it actually to do with fundamentals and how much is it to do, you know, with the companies themselves? Got a question from John in Texas about that as well, which is one of the first questions I'd like to answer before we get into that. Just before we move any further on here, let's go look at a couple of the commodities markets on here as well. Crude oil, the battle continues on crude oil. I got to say on crude oil, I like to look at the major markets teetering absolutely teetering on the $50 mark. Guys, we have to be looking at $50 now. We almost hit it right now. But again, to me, if I was going to kind of draw a line in the sand right now and say this upward trend is still in place, this market is still looking strong. I got to say $55 is my pick for crude oil in the new year as well. This is a great upward trend in the market. I remember earlier this year when literally crude was almost a penny on the dollar. And someone said to me, Sam, you know, what the heck, what do you do? I'm like, look, where was your money probably going to best be served? Buying some oil, you know, or buying groceries. It's a commodity, ladies and gents. It's an opportunity here. And what I'm seeing here from a fundamental view is people are buying into this market. They're buying into the oil market because it was so damn cheap. I mean, it's pretty much as simple as that. Logic sometimes outweighs all of the fundamentals. And again, I always find in the long run, emotions are the short-term impact, but logic and precision is going to be the long-term impact. And I always want to go with logic and precision. Call me a Vulcan. I've been called that many, many times. But logically, guys, you've got to think it's still there. It's needed. And a lot of airline companies, a lot of these other major market forces that need oil, snapping that thing up as well. 55 is the big round number on crude oil right now. That's what I'm seeing on that market right now, and that's going to be my tip on there. Could we go a little bit higher? I don't see any reason why not. Guys, I mean, let's just put it out there a little bit further. If we can actually break this entire 55 area, I got to say, it looks like we could even begin to the 60, 65s on this. Okay, you know, there I put it out there. I've said it. Open interest as well, you know, still strong as well. People are staying with these positions. That's what I'm seeing. Open interest is fairly steady on this market as well. So again, you know, buying pullbacks, that is the way. You can see what show I've been watching. This is the way, right? And by the way, just on another note, holiday sweater time. Here we go. If you haven't yet seen the last episode of season 2 of The Mandalorian, oh my god, it made me cry like a little baby, but wonderful. I'm not a spoiler giver, okay? That is just a guarantee. If you're a Star Wars fan, I'm not into giving spoilers, but go check it out. A great thing to do with your family and friends over the holiday period as well. So back over to the charts. One more commodity I would like to take a look at on here is also gold. So let's go take a look at gold on here. Gold also is another one for us to take a look at on here. So let's just do this. And for me, if I'm a little bit slower on here as well, that will just be because I am using a brand new platform on here. /gold. Let's just see on here. Okay, where are we on this? And we're going to go look at gold on here. Oh, actually, here we go. I can look at the latest chart on gold as well. Okay, yeah, let's go take a look at... There we go. Perfect. Lovely. All right, so kind of giving me a little bit of aggravation on here when I want to look at... I know what we can go. Let's go to GLD, even easier if I just go to the ETF. That will tell it all, even easier. All right, GLD, the gold ETF, struggling. I mean, gold, again, what are we seeing on here? From the perspective of trend, we are seeing a little bit more of a downtrend in this market right now. If we actually take a look, you can see that selling pressure in the market right now as we're going on here. Still this market making a series, and this is what we call of lower lows and lower highs. Okay. I can't write gold off though. And the big area for me is this area here. Okay, notice how we had a little bit of a reaction as we got close to the 165 mark and we pushed higher as well. If we can start trading above, I would say these highs right now in the region of about 177, 180, we should be able to push our way a little bit higher on this move as well. To me, you know, 150, 160 is the new benchmark on gold. This looks like just profit taking on here as well. If it does start to hit the fan in the new year, and there's a chance it could as we still roll out of unemployment, businesses being shut down, a lot of bankruptcies over this pandemic period, gold's always going to be the safe haven from a fundamental point of view. So an interesting one there and an important one to take a look at in that respect as well. So there's your major markets on here that we've seen. Going and taking a look at some of the other performers that we've got on the market right now. How's our Facebooks? How's our FANG stocks? So if we go take a look at let's go to Apple on here for a second, see how that's performing right now. You're probably going to see some of the same that we've just been seeing in line with the QQQs as well. Again, nice steady uptrend on here. Ton of sellers to get through. This trend looks good. In the short term, I was just saying on here, and again, I don't have a guest on the show today to do your call, my put, so it looks like I'm going to be doing both right now. But for me, again, the area of interest, what would I say the area of interest is on here? Area of interest for me is going to be in this region of about 120, 125. That is the bullish post on there. Pullbacks to that area could be a nice opportunity to rejoin this upward trend. But again, I would be very careful and making sure I take up some profits around the 140 mark as well. I'd like to just say this show is purely opinion, entertainment, educational purposes only. I'm not a registered advisor. I'm not here to tell you what to do. You've got to decide what you want to do. This is just opinion. And I have absolutely no problem ever putting my opinion out there in the public as well. I've been doing it for a long, long time. I always say this, just safety. Markets are at highs. Markets are climbing higher. And profits aren't profits until you take them. A lot of people forget this. They just buy, they hold, they keep going, keep going, keep going. At the end of the day, guys, one of the big things we need to remember is this: profits don't take care of themselves. You need to take them. And it can't hurt sometimes to lock in a little bit of profit when you're riding some of these bigger moves. So everything right now, the overall consensus for me and the team at Stockability is we're looking at this as saying, hey, I'll happily buy pullbacks. Happily buy pullbacks. But I also need to understand that, you know what, guess what? I need to take profits along the way as well. Okay, so, you know, again, just a little word to the wise, something to think about when we're doing this as well. So broad markets outlook on there. So again, if we summarize it back to the SPY for just a second and take a look at the overall charts on here and what's the summary, I want to take this out to a weekly chart and just take a look, and you can really see on here. This is the kind of the longer term picture. Again, every time I look at the market, you know, when I look at it, we have had a strong year, a strong bounce back. 2021, I think we need a pullback. I think we need a correction. Again, I like it if I ever have to put it on the line and just pick one particular thing. I'll always look at the SPY. And down here, this key area, let's call it between around 350 and 330 is the new benchmark. If we hold that next year, we should see more upside. If we don't, I see a little bit more of a correction. But we haven't seen the bigger fundamental picture up until this point as well. So this is one of the big things that we talked about. Now this kind of brings me, we're going to get back over to the charts and take a look in just a second on that as we get and delve a little bit deeper into things. But I also wanted to, on this particular show, give everybody an opportunity to post questions and ask questions on the show as well. And again, I guess maybe I was being a little bit hopeful because it is Christmas Eve and many people are probably spending time with their families, and here's me doing the show. But business goes on. The commitment to actually giving great education always goes on. So here we are doing it as well. I had some questions come in the show, and I want to just talk about those right now. First of all, from John from Texas as well, and I've got my list in here. And if you have questions as we go through, please ask me as well. This is going to be a short show, so we're not going to be taking too long on it. But yeah, anything you want to ask. John asked me as well, Sam, how much do you pay attention to the fundamentals versus the technical side of things? I hear you on the show talk a lot about the technical side of things as well. As you just noticed on the charts I was looking at there, you know, a lot of what I do is based on the price action. A lot of people I've been worked with and mentor over the years, it's all about price action at the end of the day. And, you know, we were just literally talking about, you know, the tremendous performance of the Russell. I mean, let's just go bring that back up, actually, while we're here. Let's just go bring that Russell back up. And I want to just zoom in for a second because this is a great conversation. Just go back over and take a look at the chart. I mean, just look at the Russell over this period of time. I mean, if that is not an uptrend, I do not know what is. Okay, look at that on there. Strong, powerful, relentless uptrend. And again, remember, this is the small caps. This is not your S&Ps. This is not your Dow Jones. This is not your Nasdaq. We're seeing it on there. So a lot of people to me are saying, well, that's kind of helpful because if the small and the mid cap stocks are doing really well at this time, maybe the economy isn't so bad. Yes, but there's something else to remember. Right now, we are in a different, and John, to answer your question, we're in a very different economic cycle than we've ever been in. I've been telling people this for about maybe the last 5 or 6 years. We're all in one big experiment right now. And this experiment is we live in a world of low interest rates. Money's practically free. You know, everyone's remortgaging their homes. Credit's very easy to get. Reminds me a little bit of 2006, 2007. But the thing is, we're not seeing interest rates going up. We're hearing that inflation isn't really a problem. We live in this world of basically super low interest rates. So where do you put your money? If you leave it in the bank, what kind of return are you getting? If you want to buy bonds, corporate or municipal, government, what kind of return are you getting? You want to put your money into an annuity? Then you're tied in and locked in and paying somebody else a ton of fees as well. So where is the best place that the investor can put their money right now? Pretty much the market. And that's what we're seeing here as well. And what we saw was a lackluster IWM, a lackluster Russell over this year, while everything else was pushing on. And then bang, once this thing broke through this whole 160 area that we're looking at right here on the charts, what did the market then do? The market literally took off. And, you know, it really happened. You know, we had this big test in this whole area just across here. Big test in this whole area across here. And ever since that basically happened, ever since that area kind of got taken out around 160 off, there's just not a lot of other places to put your money right now. There's just not a lot of other places to put the money. And that's what you're seeing with a lot of investors. They're paying returns, they're paying dividends as well. And again, the world has changed. We've got the Robinhood crowd now, fractional shares, money coming into the market. I ask you this, anybody who's looking at the show right now, where do you put your money? Where does it go? There is nowhere else for it to go, right? So, the stock market seems like the best place. And I always say this, the fear effect is a really important thing. Really important thing when we look at this, And this is why I don't get too hung up on everything as well. Because fundamentally, do I think that the market's in such a great shape right now? There's general fear out there. There's businesses shutting down. Just in the area that I live, good friends of mine own a local gym. They've had that gym for over 20 years, now shut down because of COVID. Harley Davidson shutting down businesses all over. Even Verizon closing down, stores all around the country. Verizon, the number one network in the country here in the US as well. You're seeing it, okay? A lot of major name brands, but yet the market still goes higher. Why? Because people need a place to put their money. It comes down to pure demand and supply. People are buying, people are selling. So this is what we have to do, is you take everything with a pinch of salt, right? You take the opportunity when it's there, but you protect yourself and you wait for the best opportunities. Right now, to me, is there a good opportunity to buy the market right now? Not necessarily. Okay, that's why I'm going to be waiting for those important pullbacks. And when I talk about a pullback, ladies and gents, what I'm talking about is waiting for the market to come down a bit before I get into it to get a better rate of return. A lot of people get excited as the market pushes higher. What do? They buy as it goes higher because of the fear of missing out. And I think that's a lot of what it is. Fear of missing out. So, John, this is why fundamentally I don't think it adds up with the picture. Interest rates are probably going to be staying lower. I am fearful for what would happen and the repercussions if interest rates were to actually go lower. I'm fearful for that. What could that happen on there? If interest rates go higher, what kind of impact of interest rates going higher what could it do to the whole global economy? Governments around the world, central banks around the world, they don't want to put interest rates up. That means the bank is just not a viable choice. That means bonds are not a viable choice. That means annuities are not a viable choice. You've got the markets. Although you also got currencies too, and I want to talk a little bit about that as well. I'd like to talk about the pound and I'd like to talk about Bitcoin. Bitcoin has become a regular thing. I had a question from Angela in Missouri saying, hey, Sam, what about Bitcoin? I heard you talk on it about the show last week. What about Daniel and you mentioned about different derivatives on that? Yep, I got something I want to show you and take a look at as well. And, there are some opportunities on that as well. So, again, we really do have opportunities out there if we know what we're looking for. So I hope that answers your question, fundamentals versus the technicals. And when I talk about technicals, guys, what I'm really talking about is I'm talking about the study of price action. That's exactly what I'm talking about, the study of price action on here. So, all right, what next on here? So let's actually get to Angela's question. Again, feel free to type in anything as it happens. I know if you've got questions for me, feel free to ask. And I will be answering Angela's question about Bitcoin in just a second as well. A question we just got, and this is from Gary. It's one of our listeners in the UK, actually, in Somerset in the UK. Gary was asking, he says, Sam, I see you drawing on the charts. He said, I've been studying technical analysis. What's your feeling? Is one way better than another? A great question. Do I have a favorite way of doing technical analysis? Technical analysis, if you should go study, look at it right now, is one of the most widely searched things on the internet. Technical analysis is the study of charts. That's basically what it is. It's looking at charts, it's looking at price action and so on. So, everything that I've been doing here when I've been showing you these charts on the show right now is a study of technical analysis. Again, if I go over to our charts right now and take a look at this, we've actually got a chart of Facebook up on here right now. And this chart of Facebook on here right now, this is a technical chart. So a technical analyst will be using price action to study and prices to study when they're looking for, different opportunities in the market. So do I use the typical stuff? There are many different ways of doing it. There's things like chart patterns. There's linear regression. There are moving averages. I'll make a recommendation to anybody watching the show right now. Keep things simple. One of my favorite processes is to understand the concept of price action. Is it moving higher? Is the market moving lower? A lot of this is about understanding the location of when is it a good time to buy, when is it a bad time to buy, when is it a good time to sell, when is it a bad time to sell. Most of us have been trained to basically just buy and hold. And what do I mean by that? Buy and hold. And buy and hold has its merits. I mean, look, here's Facebook, right? Okay, let's just go and take a look at a long-term chart of Facebook since its initial launch. Can you believe it? All the way back when it launched launched at what, $42 a share, and went all the way back, $42 a share back in 2012. Look at the meteoric rise of it. Anybody looking at a chart like this will say, man, there is a case for the power of buy and hold. And typical buy and hold investors are not huge fans of technical analysis because they'll buy, they'll hold. They're not going to think about what price they're paying for it. They're just going to think, hey, I want to own it. Somebody wanted to get involved with Facebook, if they were looking at the balance sheet right now, looking at their PE ratios, looking at all the things that are good, bad, and ugly about Facebook, if they decided this was a good investment, they just go and buy it right now. And right now they'd be paying $266.88, 82 cents right now on the button for that stock. But here's the problem. You go buy that thing right now, then the question is, well, what's it going to do after you buy it? Is it going to come down a little bit? Is it going to go up? Is it going to go down here? Is it going to go through this? The worst thing that could have is you just buy and hold. You hold through all the downs as well as all the ups. Okay? What that means, therefore, is you're not using any real study or skill to actually time when you enter the market. Because here's the problem. I could buy Facebook right now. And let's just assume that, I went and said, hey, I'm a big believer in Facebook right now. And I bought it right here. What if for the next year we get a load of this? What's my money doing? Well, I am losing dollars at that particular time. That's what I'm doing. Now, eventually it might come back up, but I don't get that time back. Somebody who's using technical analysis is using this as a study, using it as a methodology to actually say, hey, when would be the best time to buy and sell it? Now, somebody like me looking at a chart like this, I'd be saying to myself, well, if I was going to be going, for Facebook, I got to say, I like this thing around $200, $220 a share. That means I'd be waiting for it to come down in the anticipation that it's going to go up. I want to capture maximum upside. That's what we call market timing. Okay. Now, there are some extremely well-respected and incredibly successful people and investors, prolific investors, who say, hey, don't try and time the market. That doesn't mean you can't. It just means that maybe that's not the thing that's worked for them. Okay, there are plenty of people like Paul Tudor Jones, my personal hero, who've made a great returns and incredible name for themselves over the years by timing the market. And they're going to use a form of technical analysis. The problem you've got with technical analysis is there's a lot of different things out there. I've always liked the simple approach. I could probably write 10 books on technical analysis. I could talk to you about Bollinger Bands, moving averages, stochastics, slow stochastic, fast stochastics, linear regression, harmonic patterns, all of those things, candlestick charts. Hey, if you've read any of our articles from Stockability.com, you'll hear me talk about this before. All of this stuff, it's pretty cool. But at the end of the day, the most important thing that anybody here who's got an interest in starting to learn how to trade and invest properly, they need to focus on, I didn't draw that very well. They need to focus on the most important thing, which is price, my friends. Price. And, to answer your question, the reason you don't see me putting a load of technical things and fancy tools on here is because everything I need is on a price chart. Everything in front of me right now, everything I really need is on that price chart. So I always like to have the approach of looking at the markets from that perspective and saying, hey, what is in front of me? Right now, what am I seeing? We're looking at a monthly chart as it stands on Facebook right now. I'm going to go ahead and I'm going to take it down to, let's go to a weekly chart. And, what do I need to see right now? What is this market showing me right now? It's showing me indecision. That's what Facebook's telling me right now. I don't need any fancy tools or indicators. Here we have a market that has literally been going sideways since pretty much the summer. And this is my point. If you'd have been the person buying those highs at $310 earlier this year, right now you're sitting on a decent loss. Your money ain't doing anything for you right now. You're hoping it's going to go up. That's why I call buy and hold investing a lot of the time buy and hope, because that's what you're always hoping. What a technical analyst is going to do, or what an active investor is going to do, is they're going to look at this from a different perspective, and they're going to say, hey, there are key areas where I would like to be buying this market. And what I'm going to do is I'm going to be patient, and I'm going to wait, and I'm going to buy in those areas here where I'm going to maximize returns. And that's going to have a massive long-term impact, on the results potentially of the trading that you do. So something to think about on here as well. I would always say to anybody looking at the show, got an interest in it, there's a whole world of information out there. We've actually just got now some new blogs and fantastic resources on Stockability.com. Go check it out. A whole introductory series, all complimentary for you to go go and look at right now, get a little bit of an understanding. And when I built that program, I was like, look, I just want to put the basic stuff in here that's actually going to help people rather than confuse people. It's one of those things you can open up a minefield if you're not careful. So to answer your question, that is why I keep it really, really simple on there. What's up, Jim Walsh? How are you? Great to have you on the show as well. And Merry Christmas to you, my friend, as well. A lot of guys are joining us on the show right now. And if you are looking at the recording of this as well, feel free to email at any time, support@stockability.com. I'll also give you details in just a moment of this show about how you can join us for a complimentary webinar about the world of options with my colleagues Daniel Bustamante and Ryan Watkins. That's actually going to be next Tuesday as well. Next question I had on here as well is, and this one actually just going back over to the, let's just go back over to my charts again and to my, go through my notes on here. I tried to get all of these as they were coming in the real time. Okay, good. This one came in from Aaron. Okay, this is Aaron. He's in the Boston area. Aaron said to me, Sam, I see you talk about a lot of different stocks on the show. Okay, you do. You personally, do you have a watch list? How do you know what is a good stock to buy? What a great question. I know it's a good stock to buy when it works out in my favor, right? If I buy it and it doesn't, then it probably wasn't a good one. All the ones that work out good are the good ones. But, all jokes aside, what a great question. There are literally hundreds of stocks out there. There are so many different things that you could look at. Personally, what I find has helped me over the years is to build a dynamic portfolio. And what I mean by a dynamic portfolio is a focused dynamic portfolio that's built more towards, short-term, medium-term and long-term trading and then longer-term investing as well. And then to make my life a lot simpler, I have focused things that I look at. So I might only have a watch list of a couple of things that I look at on a day-to-day basis, maybe about 5 or 6 things on a monthly basis, okay? A focused watch list. And some of the things I like to look for is, how much does the market move on average? I want a stock that moves. I'm not going to trade a stock that only moves 50 cents a day. I'm also not going to want to trade a stock that moves $20 a day. Okay, at least I'm not going to be doing that without using something like options. So one of the things I'd recommend anybody looking at on the show right now is to say, hey, take a focused watch list. Now, how do you know what's good? Well, there's selection processes, average volume per day, market cap, when a world of volatility in options, the strikes. And again, you might be brand new going, Sam, I don't know what you're talking about right now. And that's perfectly fine as well. Heck, you may have a stock that you just like because you're familiar with its characteristics. I've always been pretty active and I like trading Disney. I like the way it moves. When it comes to the currency market, I've always been a fan of the pound versus the New Zealand dollar. Why? I just got to know it. And then one of the things I found for most active traders, investors, what they do is they have a very focused watch list. My colleague, Daniel Bustamante, who's been on the show, my co-founder of Stockability, he comes from an institutional background from his early 20s and he still works in the hedge fund business. And what they do is they treat everything like a sub-business within a large business. So there'll be people who are responsible maybe for the industrials, people who are looking at more the tech sector, some who are focusing on commodities and so on. I'd suggest you do that first. Try and go to this, start small, have a watch list of no more than 5 or 6 stocks. And then when you branch out into the different markets, you keep very focused watch lists. And there's a number of things, like I say, to do. Check out things like volume. You want to be making sure you're trading things that are doing at least, in my opinion, over a couple of million shares of volume a day. That's a huge thing. You want to know that you can get in and out. You want to see tight spreads between the bid and the offer, okay, of just a cent or two. That's a big thing as well. And ideally, you want to be looking at stocks that are part of some of the bigger markets. I like a lot of the stocks that come as part of the NASDAQ index, okay? So anything from there as well. Or you make life really easy. One of my favorite things to trade is, guys, if I want to make my life super easy, I'll tell you what makes my life super easy is trading this. One of my favorite things to trade. QQQ, we just looked at it in the show on here. Love trading the QQQ. Why do I love trading the QQQ? This thing has got enough movement on a day-to-day basis to make it worth my while. This is a great market, okay? And it's also a basket of stocks of some of the biggest stocks in the market right now. I might as well just trade this, I've got a bit of Apple, I've got a bit of Google, I've got a bit of Facebook. There's a ton of open interest in the options world as well. It's just a great market in all respects in that. So I'm a big fan of trading the QQQs. Makes my life easy. I'm a man of simplicity, so I like to just look at the market and know what I'm trading. And I can trade this thing as a derivative for, say, the futures, or I can trade it, the QQQs outright, which is the stock ETF. Or if I want to, guys, I can even trade the futures, which is the NASDAQ, or even now micro futures. In the new year, we're going to be talking all about futures. If you've never heard about futures before, we're going to do a futures special coming in January here on TakeStock Live, give you guys a little bit of an idea about that. We talk about a lot of these different asset classes, and sometimes you just get overwhelmed. Most people know stocks, that's how I started out, but if you're not familiar with some of these other asset classes, we want to help you get a little bit more familiar with them. So coming in the new year, we're going to do a bit more of a focus on the individual asset classes: futures, commodities, options, and the wonderful world of forex as well. Okay, so I hope that answers your question. Focus, watch list is the way to go. Another question that I had just come in as well, and I got time for just a couple more before we wrap up on here as well. Really good one on here. This one, this is coming in here. This one's coming in. Let me just see what was the name of our friend on here. I want to make sure I get them all in the order that I actually had on here. Okay, this is from Brian. Brian's out on the West Coast. I believe he's in the San Diego area. He says on here, Sam, been trading and investing actively for over 10 years right now. He said, how much weight do you put on mindset over strategy? I read a lot of books, but mainly about strategy rather than mindset. Wow. Well, if you've ever been on the show before and watched me before, I am big on the mindset part of this. When I first started my career, I looked at tons of different books. I went through, more than you can think of, all about strategy, support, resistance, all that good stuff that we were talking about before. But I found the most impactful literature, reading that I ever did was on the mindset stuff. And I believe healthy body, healthy mind, healthy body. And, it's all linked. It's all about what you think. Your results are directly, typically, a product of the way you act and behave and what you believe. If you go to the market every day thinking, I don't know what I'm doing, then I'm going to lose. You're going with a bad attitude. If you go to the market with a gung-ho attitude of, man, I'm just going to buy it and it's all going to come good, you're going to get one day that rude awakening when you realize, you just wiped out or blew an account. So much of this is about, I say, process. And, I'm a big believer, this is me personally, in system over strategy. And let me explain it very quickly on here. You can have the greatest strategy in the world. I see this all the time. Okay, I see this all the time. I see, websites, pop-ups, you're going through stuff and some guys, here's my multi-million-dollar strategy. Here's how I did this. Here's how I made that. And I'm going to give it to you. Well, that's great. I'm not saying that those guys have not been successful with a strategy. Far from it. I'm not the guy. I don't point a finger at anybody. My question is not, hey, is that really a successful strategy you use? My question would be, well, you've got a great strategy, but is it a strategy that's going to work for somebody else? That's always my question. See, you could give me Paul Tudor Jones's strategy. You could give me George Soros's strategy. You could give me, Warren Buffett's strategy. Doesn't mean it's going to work for me. I'm going to take that because people say to me, Sam, Warren Buffett says this, Warren Buffett says that. Great. Warren Buffett has got more success than anyone else probably ever. But also, if you want to go and trade Warren Buffett's way, guess what? He was working with a very different market. Go back 30, 40 years ago, stock market was a whole lot cheaper, a lot easier to buy, hold, accumulate, and roll your dividends back into it. Right now, people don't have the capital to invest the Warren Buffett style. So they can pick good stocks using Warren Buffett's methodologies. I tell you that, without a doubt. That guy's I use some of his, measurements between GDP and market cap. Fantastic. I use that all the time, and we'll talk about maybe that in a later show. But you've got to have Warren Buffett money to get Warren Buffett results, and the opportunity is just not the same right now. Coca-Cola isn't practically a penny stock, okay? So the point is this, you can have a great strategy, but is it a right time to use that strategy? I'm more of a believer in system over strategy. Do you have a systematic process to find your trades? Do you have a systematic process to scan the market? Do you have a systematic process to find your targets? There's this big thing that goes out there, 3-to-1, 3-to-1, 3-to-1. That's always a big thing. If you're going to risk $1 to make 3, that's great. Well, hard to do in today's markets. Some of these markets right now, they're not offering 3-to-1 trading opportunities. And then another day, they'll be offering an average 10-to-1. You've got to know the difference between the two. So why am I talking about this? Well, to come full circle on the question, a lot of it comes down to what's going on up here. You need a process that you can easily follow. You need a process that you can easily implement. And you need to be comfortable with the outcomes. You need to be comfortable putting your money on the line, defining your risk, knowing your risk management's there to keep you safe, and then accepting that the outcome may be good or bad. And that is a psychological decision. You understand? I would recommend anybody read more on the psychology behind trading. And that's why I believe in focus groups, mentorship, and all that kind of good stuff. I've had mentors and focus groups all my time. And looking at people saying, hey, man, one of the things I noticed, some of my, I'll give a shout out to my first mentor, Bob, my first major mentor, Bob. Bob, yeah, man, I love what that guy does. I love the way Bob trades. But you know what? The way he trades doesn't work for me. The way he manages positions just doesn't work for me. It works for him. Why? I've got a different psychology. I'm at a different point in my life. I would encourage anybody here right now looking at this show is work on the mindset side of things, okay? So if you're going to go there, don't read any more books about technical analysis and strategies and all that kind of stuff. Go look at books about how to come with a sharper mind and come with a more objective attitude to the market. I hope that answers the question. Great question. Really, really happy that you asked that as well. I hope everybody got something from that. Got time for the one more as well. I think it was Angela. Yeah, Angela was asking about Bitcoin. She said last week on the show, you mentioned Bitcoin. You were talking about it with Dan. You were talking about the feature Buster Bitcoin. What are your thoughts on it? Let's go take a look and see where we are right now. Let me actually take a look and see. Now, I don't know if I've actually got the quote on here as well, but if I remember rightly, Bitcoin's trading around 23,000 right now as well. I will go take a look and see what I can find on here as well. Here we go. Yeah, this is it. I'm just waiting for the data to just come through on here right now. As it stands, 23,499 is the data that I'm looking at right now on here. I'm going to actually bring up a daily chart if I can find it. Hard to see on here, but around 23,000 is the current price of Bitcoin that we've been looking at on the charts right now. What do I think about that? You know, look, I'm open to it. I was talking about this on the show last week as well. I've changed kind of my attitude a little bit. Here you go. Here's the charts. Brought it up for you right now. Here's our index. I mean, look at that. Okay, so this is our daily chart. Recovering a little bit right now. Highs of 23,999. Now I'm looking at here at the Bitcoin Liquid Index on here. So, 24,000 on here. A good friend of mine owns quite a few bits of Bitcoin. He's a very happy individual right now as well. I don't know. We talked a lot about this. Again, I see some major investors coming into it. Originally, this was a retail market. I stayed away from it. Now, apparently, a lot of the major institutions and banks are getting on it as well. My attitude is this. It's one of those things of do you just let it keep going without you? Do you let it keep going without you? Do you be stubborn about it? I focused on, like I say, the currencies I know, the pound, the dollar, the euro over the years and everything. But there's no denying that obviously, the bigger players are getting behind it. I think, what is going to be really important for Bitcoin right now, if we're going to go mark some key areas, is this area here. 20,000. This whole area here, this is a really point. And again, I have to go wide. I mean, the volatility in the Bitcoin world is absolutely huge, ladies and gents. But looking at this right now, what we've got on here, 20,000 is a big benchmark for Bitcoin. Again, as well, you've got to ask yourself, do you give it a shot? I mean, there's a lot of unknowns on here as well. I think there's a huge amount of faith that's been lost in typical fiat currency. And when I talk about fiat currency, I'm talking about, the regular things that we're all used to. The US dollar, the pound, the Canadian dollar, the Australian dollar, the euro, all of that. A lot of faith has been lost in those fiat currencies. Is this a viable alternative? Is it representation? I mean, look, let's ask ourselves a question on the show right now. If people told you, 20 years ago that you could be, running your own show from your office, that you would have a speaker in your home that you could talk to that could turn the lights on and off and control your thermostat, you probably would have said, yeah, okay. What about if 30 years ago we would say, you know what, we are going to have self-driving cars? Okay, heck, I bought my wife a car. I didn't even realize it could drive itself, and I'm going along and I'm like, wow, I bought it not even realizing it could drive itself. That's the world we live in. Here we are now saying, Bitcoin, no one really knows. We're in that world now where who really knows? I think the question is not do we have faith in it. The question is make a decision. Are you going to take a swing at it or not? Let me go on the record right now. I don't treat Bitcoin like I treat the QQQs. I don't treat Bitcoin like I treat Facebook. I don't treat Bitcoin like I treat the S&P. I don't treat Bitcoin like I treat oil or gold. I don't treat it the same way. I'm not going to use the same tactics on it because I don't know enough about it. We don't know enough about it. The world doesn't really know enough about it. We think we do, but it hasn't yet been embraced as the new currency standard. Could it? Maybe. Who knows? It's an unknown for everybody. The question more is this. People are buying it. There's a trend forming. And are you going to get on the train or are you going to stay well away from the train? Well, if the train leaves without you, don't moan and cry about it. Okay, so you've got to say to yourself, are you going to embrace it and give it a shot? To me, it's purely speculative. It's no different than saying, hey, you know what, I'm going to back it. I'm going to put a little bit in it. And you know what? In today's world, there's people all around the world, across this country right now, piling money into 401ks and ask them how that worked out for them in 2008. Right now, if this market was taking 80% sell-off, it would affect your retirement on your IRA. It would affect your retirement on your 401k. In the UK, it would affect your SIPs. It would affect your TSPs. Anywhere you are in the world right now, anybody with a retirement account based on the market is at risk if the market goes down. So to me, it seems like, you know, maybe cryptocurrency is an alternative hedge. Maybe it is a hedge. Maybe it is an alternative investment. Do I treat it the same as I treat everything else? Absolutely no. But I will look at it as an alternative investment. And derivatives of it right now could be a powerful thing. One of the things that's got me, you know, quite interested lately, and I want to share this with you, is the BITW, which is the Bitwise 10 Crypto Index Fund. I like this. This is an index of cryptocurrency, okay? Bitcoin, Ethereum, okay? And all of those ones as well. I forget the names of all of them. But this is a fund. This is like an ETF for cryptocurrency. Price right now around $72. Had a huge pop up to 200 last week and then came back down again. I think this thing needs to establish itself. I really, really do. I think it needs to establish itself. I think it needs to kind of find, you know, a little bit of its way in the market. I don't really think we can go down to a much smaller time frame. And there it is on a 4-hour time frame that you can see on here. But it'd be interesting to see. I'm going to keep a close eye on this. If this thing comes down a little bit, I might be interested in doing a little bit on it. Okay. I would like to take a derivatives. Dan and I were talking about derivatives of cryptocurrency. And that for me would be the thing. I don't want to just put it all in Bitcoin. There's other current cryptocurrencies right now that actually outperform Bitcoin in recent times as well. So again, you know, I'm open to it. I'm going to keep talking about it on the show. I'm going to give it. This is going to be my one to watch. BITW, the Bitwise 10 Crypto Index FD.com. I'm going to keep looking at that right now. I'm interested. And here's the thing. If you want to put a few dollars in that, it's no different to putting a few dollars in your retirement account. Who knows? It's unprotected. You could protect this. This is something you could put in. You could put a stop in. You could protect your investment as well. Way better than a mutual fund, if you ask me. I want to see volume come in. I want to see it kind of, you know, the volume increased on here as well. But, you know, guys, an interesting little thing to look at. So I'm not writing it off. I'm open to it in 2021. That's what I'm looking at. So that's how it is. Now, while we're on the subject of alternative investments, and thanks again for all the questions that were coming in as well. Thank you for the support, Jim. I really appreciate you saying there. If you haven't joined the Stockability family, make it your New Year's resolution. That's really kind of you. Look, if you're thinking about, you know, taking your trading and investing to another level as well, and maybe like looking at doing some other things in the market, why don't you check this out just before I go? And I try to keep this show, you know, far from, you know, promotion. But this is the Stockability website that we've got right now. We just updated this hugely on here. If you're under the education now, got complete breakdowns of all of the programs here, from foundational income, wealth, options, everything on there that you can take a look at as well. There's also the complimentary webinars. If you scroll down to the bottom of the homepage on there, you will see that this coming Tuesday the 29th that we have on here, coming Tuesday the 29th, right here you can see it. We have a complimentary webinar, and this complimentary webinar will be about 90 minutes or so. And in this complimentary webinar, complete options for a complete portfolio in 2021, where our team's going to be talking about income on options, wealth on options, how to use it, some really cool things to show you of some of the, you know, the successes that Stockability students have had, how they've been implementing options in a simple way for both short-term, you know, day trades, weekly trades, monthly trades, all the way out to what they can do on retirement and wealth counts and beyond as well. So it's complimentary. We're going to go through that, talk to you a little bit about what we do in that. Hopefully you can join us as well, all you need to do is just go to the Stockability website right now, stockability.com. That's where you need to go right there. I'll zoom in for you, stockability.com. That's where you need to go. And then scroll down to the bottom of the front page on there and take a look. And you click on the register button, you'll be able to register for that. And we will see you 5 p.m. Eastern. So even for you guys in the UK, 10 p.m. at night, that will be there. And we can tell you a little bit more about what we do. Hope to see you there. It'll be a real good time as well again. So that's where we're at with that. I do love my options, and like I say, I'm not going to be steering away from that anytime soon, but I definitely am open, like I said, to the world of cryptocurrency as well. All right, so here we go on that. I don't feel like I've stopped talking. Here we are. I said I was only going to be about half an hour, but that's the great thing about having your own show. You can pretty much go as long or as short as you like. So we looked at the markets. Kind of not really, opinion over the next couple of days is play it safe. That's just from me to you. I'd stick around, give yourself a bit of time, feast on your ham, your turkey, your beef, your goose, your duck, whatever it's going to have. Hang out with the family. This is a Christmas unlike any other here. What a time we've got to stay with those loved ones. Stay safe, more importantly. I think there's a whole ton of news going to be out in the horizon in the January about, obviously, vaccines and different strains of COVID. A whole lot going on right now. But wherever you are in the world, what an important time of the year. Use this as an opportunity to spend as much time with the loved ones and, take stock of everything. It's the name of the show of what's important to you right now. So that's what I'm doing. I'm going to switch off from all this market stuff. I don't let it rule my life. I love it, as you can probably tell, but it also doesn't rule my life. It enhances my life. And that's what I want for anybody who's looking at this right now. Taking an interest in the markets. Use this as a way to enhance your life, not dictate your life as well. And always focus on, your quality of your life and those around you. That's always the most important thing. And I found that everything else fits into place pretty nicely from there. I'm super excited about what the new year has to offer. I'm super grateful for everybody who's joined the show to watch live as well and taking time out of this very special time of the year. And if you're looking at the recording of this right now on the Facebook Live or the YouTube Stockability page, thanks for taking the time to view it as well. I hope you had fun with it. This is a weekly show. We are with you every Thursday at 12 noon Eastern, 5 p.m. London time. We're here. We're doing it. Usually I'm here with a guest. I thought I'd just do it on my own. I'm letting everybody else just hang out and do their thing. And I will be back with a New Year's edition next week. We'll be back on Thursday, which is New Year's Eve. We'll be doing the show just as normal on New Year's Eve, in time for everybody before they even go out as well, to be doing some kind of, have a little bit of fun on there, some market predictions coming up. I'll be joined by some of my colleagues from the gang as well, and we'll be doing it from there. But if I hadn't said it already, I'm going to say it to you. Guys, this has been a year unlike any other. Go out of this year with a blast, but more importantly, do it safely. Stay healthy out there, stay warm, keep a smile on your face, and sincerely from the whole team at TakeStock Live and Stockability, Merry Christmas and a very Happy New Year to you all. I hope you've been good. He knows who's naughty and he knows who's nice, okay? So I hope you've been good. Enjoy this special time. I've been Sam Evans. This has been TakeStock Live, brought to you by Stockability. I'll see you next week at the same time. Thanks for joining me. Take care. Bye-bye.